A Connecticut man has been warning the public, get your money out of U.S. banks immediately. A historic financial reset in 2023 could cause a run on the banks unlike anything in our nation's history, he says. His warning has already reached 8.4 million Americans and 30 TV networks. And yet, few people realize this could actually happen on U.S. soil, or what a sizable impact it could have on your wealth, especially if you have large amounts of cash in the bank right now. Normally, I might ignore all this, but it turns out he's a Wall Street legend whose work predicted the COVID crash, the 2022 crash, and the 20 best stocks of 2022, and more. Today, he's urging you to move your money into a new vehicle 50 years in the making. He's even posting a free recommendation, which you can access at reset2023.com. His work pointed to a 10,090% gain back in 2020, so don't miss this. A new vehicle outside the banking system could massively boost your wealth. You can get the details today at reset2023.com. Again, that's reset2023.com. Hi, this is Daniela Cambone. Welcome back to the Daniela Cambone Show here on Stansberry Research. Today we are talking about the possibility of Saudi Arabia looking to join the BRIC nations. Is this a sign that the world is ready to move away from Western dominance? Here to talk about this and so much more is Willem Middelkoop, author of The Big Reset. He's also the founder of the Commodity Discovery Fund. Willem, always good to be with you. Welcome back.
Yeah, great to be back. And the reset seems to be happening as we speak.
Absolutely. And you know, in my preparation for this interview, Willem, I felt so overwhelmed because news just keeps flowing in here. So I really hope to get through all my talking points. But let's start with this possibility and news items floating around that Saudi Arabia could perhaps join the BRICS here. Just for some context, the group, known by the acronym for its 5 core members, Brazil, Russia, India, China, and South Africa, consists of more than a quarter of the world's GDP and about 40% of the global population. What's interesting to me, Willem, and this is my take, it was almost started as a marketing ploy back in the day, almost like, you know, let's just put these group of misfits over here, you can't sit with us at lunch crowd. But now they've become almost a sleeping giant. Or perhaps not really sleeping.
Well, it's a waking giant, actually, because if you look at the current situation, and what always struck me, that if you look at the countries who applied the sanctions against Russia, if you follow the Western press, it's like all countries are applying sanctions to Russia now. But if you study it in detail, it's just the West. It's just the West. It's a few dozen countries, and there are over 140 countries who don't join the sanctions. That this doesn't make them Putin supporters, but I think they want to stay neutral. They're fed up with the Western double standards, and now more and more of these countries from Latin America, Middle America, Africa, the Middle East, and Asia have chosen to join the BRICS alliance. We've seen Algeria joining, we've seen Argentina joining. And there are rumors that more and more countries want to join. And now we have the BRICS really becoming a very, powerful alliance. And what I always say, it's the West against the rest of the world now. And that's very, very significant, whether Saudi joins or not.
And is this, the epicenter of the reset you speak about?
Yeah, when I wrote The Big Reset in 2013, that thesis was about finding a new anchor for world's financial system. So finding a successor for the US dollar. Well, that could be a BRICS currency currently being developed, as Putin has said. But it also contains of debt restructurings. And we could see a gold revaluation as well and a dollar devaluation. So this plays out according to my thesis.
So let's dig a little deeper. I found a research paper entitled Russia and Global Affairs. Now, keep in mind, it's written from the optics of a Russian, Fyodor Lukyanov. I hope I'm not butchering his name. He's the editor-in-chief of Russia and Global Affairs, works for the National Research University at the Higher School of Economics in Moscow. And just want to share with you, Willem, a few things he wrote. He says, the events of 2022 initiated by Moscow have clearly divided the world into a Western part that rallies against Russia, while others take a wait-and-see approach. The West used the entire arsenal of pressure at its disposal to punish Moscow and demonstrate how disobedience is punished. The result was quite unexpected. All the other countries, especially the big BRICS states or those claiming a role in the world of their own, not only distanced themselves from joining the Western campaign, but outright rejected it. And here's the part I think is crucial. This is where it became clear that BRICS has considerable potential. It might be a rather fuzzy grouping, but it's better prepared than anything else for those interested in alternative schemes of international order. Do you agree with this statement?
Well, actually, in the Big Reset, I made a revised edition in 2016. And I mentioned that Moscow and Beijing will seek a reconstruction of the current world order. And that's the quote you just gave is a perfect illustration for that. So what we can conclude now that we have the Western countries, let's say 1.5 billion people who support the sanctions, who support these Western, actions against Russia, and you have over 6 billion people who live in countries who don't support the sanctions and who are behind this BRICS alliance or tend to be positive towards the BRICS alliance. And this has resulted in a few research papers from major banks, as you might remember, Zoltan Pozsar of Credit Suisse, writing that we are seeing the start of Bretton Woods 3.0. We've had a piece of research coming from ING Bank saying that the BRICS might be a new name in the reserve currencies because that ING analyst, he said that the BRICS might start to use a new world currency, a new reserve currency. So the signs are everywhere.
So let's tie this in, because here's my big question for you. Joe Biden meeting with Chinese President Xi Jinping to discuss Chinese economic practices. The U.S. must be aware and monitoring all this. How should they be preparing here, or is it unstoppable at this point?
Well, I think the U.S. is getting nervous, and China has made an official command by its foreign minister that the US should alter its course or face conflict, an inevitable conflict. And China also have made statements, and this has been very rare in Chinese foreign policy, that they are preparing for war. And we've seen a quote from a US general that the US has to prepare for the big one. They say what we're doing to support Ukraine is just the start. We have to prepare for the big one. Well, the big one can only be a confrontation with China. So that's why more and more people are starting to get nervous that you could end up into a road towards a World War III. And even the Pope has mentioned it and warned about that.
So let's connect the dots, Willem, to the central bank gold buying that we're seeing. We haven't seen this much happen since the 80s. They bought 400 metric tons in the September quarter. One of the world's top gold buying central banks, Uzbekistan, says it has reversed plans to buy debt, and now there's hardly such a thing as too much bullion. They want more and more gold. So, yeah, what's this telling us? I mean, are the central banks, if they're hoarding all this gold, buying records amount of gold, what are they preparing for? What do they know that we don't?
Well, I think it's a move away from paper assets to hard assets. We've been discussing this for the last few years. Remember Bill Gross, the founder of PIMCO, he said in an interview last year that bonds are investment garbage now. So We've seen that Russia stopped buying treasuries, China stopped buying treasuries, Japan stopped buying treasuries. So there's a huge problem there. And if you don't want to buy any more bonds, if you don't want to invest in more paper assets, then it's very attractive to buy hard assets. And the hardest assets of all is, of course, physical gold. So if you're a central banker, you can print money and use that money not to buy US shares like the Swiss National Bank have been doing, but to buy physical gold. That looks like a very good strategy. And actually, all countries east of Germany have been growing their gold reserves in a massive way. And I think this has something to do with the possibility that we could see a gold revaluation, a dollar devaluation, as being part of this reset, monetary reset thesis. And more signs are pointing towards that. So if you know gold revaluation is coming, what's best to do is to position yourself and add to your gold reserves.
But two mystery buyers remain, right? Russia and China. We don't know how much gold they added or if they added. Obviously, a lot of suspicion that China has been hoarding gold. We know that any gold that's mined in the country is kept in the country. Thoughts or insights there? We don't have numbers, but what does your gut tell you here?
Well, I always point to what Jim Rickards has written in some of his books, that the Chinese proposed to the US after the Lehman crisis, when Russia actually asked China to join them to dump US bond holdings. And then China proposed to the US that they wouldn't sell their treasuries, but in return, the US would agree that China could grow their holdings in physical gold to the same level as the US and Europe has per capita basis. I think that's what we've seen playing out in the last 10 years. I think this is in agreement with the US. And once China, Europe, and the US have the same amount of physical gold holdings per capita, a gold revaluation could help all, because the balance sheets of central banks will profit from a gold revaluation.
But wait, Willem, help me understand this. Why wouldn't the States, the U.S., want to remain the dominant player in terms of gold holdings? It's seen as a sign of power. Why would they want China to have? Why would they want it to be equal footing?
Well, the U.S. knows it can't hold on to this unipolar superpower status. Even Germany and China, there was this surprise visit by the new German leader to Beijing last week, and they came out with a statement that both China and Germany support a multipolar world instead of a unipolar world. So, and the US knows this. The US knows you can't hold on to this dollar superpower status forever. And there will be a point in time where we have to sit around the table and discuss what will be the next phase for world's financial system. And then you should be able to find some common ground. And we know there have been a few conferences in which China took part, in which these kind of discussions have been been planned.
Well, I just find it hard to see the U.S. rolling over on this. I know you're saying they might not have a choice, but I can't see them going down without a very, very, very difficult fight here.
Well, that's why this U.S. general said we have to prepare for a big one. That's why China is warning, when the U.S. doesn't alter its course, there will be an inevitable conflict. But if you're a world leader, you should plan for different scenarios. So you plan for conflict and you plan for compromise.
Right. Willem, just want to bring up a subject that is certainly close to your heart. The governor of the Dutch central bank stating that gold revaluation account is a solvency backstop. This is from an article from Jan Nieuwenhuis. Again, hope my pronunciation is okay. where he writes, the governor of the Dutch central bank stated the gold revaluation account ensures the solvency of his central bank. He said this in an interview on national television about prospective losses. Can you explain to us the significance of this?
Well, actually, this statement supports my thesis that we will see a gold revaluation at some point in time as being part of the monetary reset. And this statement is quite unique because central bankers don't like to discuss this part. But we've seen a gold revaluation in the past. We've seen it in the 1930s, where the US had a gold revaluation and a dollar devaluation by 40% to fix the crisis. And actually, his answer of the Dutch National Bank president, his answer followed a question from a Dutch journalist on national TV, how the Dutch National Bank would cope with losses. Now the interest rates are rising and you'll have massive losses in the bonds portfolio, because this will be a problem for many, many central banks, and especially in Switzerland, where the National Bank bought all these assets and now is coping with huge losses in its portfolio.
Let me ask you this, Willem. We've seen the recent crypto carnage. It's more than a crypto winter. It's hell freezing over basically for the crypto landscape. There was talk of, would a new world currency have a digital element to this? Does this change the game plan? And based on what you're telling me, just make the case, make the thesis stronger for gold, or is there still a digital component?
Well, since 2014, I always said Bitcoin is digital gold, but we've seen the rise of thousands of altcoins, and most of these altcoins, or shitcoins, like most people call them, these are just Ponzi schemes, and some of the people active in the crypto space, they're worse than Wall Street bankers. So with the popping of this crypto bubble, I think that really supports the case for just physical gold. And we've seen, always ask yourself, what would central bankers prefer to do? Use Bitcoin to modernize the system, to have a monetary reset, or to use physical gold, which they own, and they're busy creating the central bank digital currencies, and they are willing to use the central bank digital currencies as their form of crypto. And there's a risk that they will try to sabotage some of the crypto developments, maybe close on and off ramps so people can't trade their Bitcoin into fiat. So I think there's a strong push for central bank digital currencies in almost all countries. You see that, and there you see the same common ground in China, in Europe, and in the US.
But how many more of these moments will we have to go through? We saw what happened with Celsius, and then the talk was like, it's a good thing, it's going to make the space healthier. Now FTX blowing up, and again, there's talk like, okay, we're getting rid of the not so great players here. But how many more episodes do we have to go through?
Well, I think digital assets are here to stay, and Bitcoin being the first digital assets, and being maybe the soundest form of digital assets, is here to stay. We've seen all these boom and bust cycles in crypto. It started with Mt. Gox. When was it? Almost 10 years ago. So I think it's here to stay. But it's very healthy that there's a shakeout, and that the bad actors who are running these Ponzi schemes and just creating money and value out of thin air are being cleared from the game.
FTX founder, as you know, Sam Bankman-Fried, tweeting that he is sorry, admitting that he, foul language word I can't say on air, should have done better. I don't even have words for it, but I mean, what are your thoughts here?
This guy was valued with a personal net worth of, what was it, over 30 billion. And now he seems to be in debt. So easy come, easy go. And these are some crocodile tears. And I think it's just good that these bad actors are cleared from financial markets.
Okay, let's talk inflation now. How can I not with you? We see the latest CPI data, 7.7, which they say, oh, look, things are cooling off. Thoughts on that number? And is the market telling the Fed, back off, stop tightening, leave us alone?
I think the declining rate of inflation helps the market with the idea that we might see a pivot by the Federal Reserve early next year. But what's very important to understand that we've seen the end of a 40-year trend of declining interest rates. And now interest rates are rising worldwide. This has led to inflation, or maybe interest rates are rising because of inflation. And once you have such a major trend change and a new trend starts, and I think inflation going up is a major new trend worldwide, maybe for decades to come. These trends always come in a few phases. So you can expect, just like in the 70s, if you study the inflation of the 1970s, this inflation came in three phases. There was a first phase, which started actually in the late 1960s, and then inflation came down, and then you get another rise, and then it comes down again, you get another rise. And I think we're in the same kind of process, the same kind of mechanism. So I expect inflation to come down next year towards maybe 7% or 5%. In Europe, in the Netherlands, we have inflation of 17%. But I don't buy the idea that inflation will go back to 2% and things will get normal again.
I mean, you're joining us from Dubai now, but tell us the real deal. I mean, you live in Europe. Tell us about the real energy situation, because I've had experts on, like Marco Papic, saying it's overblown. I mean, I just came back from Rome, and I disagreed with Marco. I think most people I was speaking to are extremely concerned, saying they can't make their monthly payments with heat and etc. What's your take?
Well, we have a very serious situation. I think we reached the end of cheap money. We reached the end of cheap energy. We reached the end of cheap labor. And we reached the end of cheap solutions. And cheap solutions is printing money by central banks. This has solved each and every crisis in the last few decades. But you can't fix inflation by printing money. You can't fix an energy or food problem by printing money. So central bankers are stuck. And if you look on a personal level, I live in the Netherlands. I also live in Switzerland. Well, also in Switzerland, the cost for electricity, they tripled. And this is the situation for most people living in Europe. And here in Dubai, of course, you use a bit less energy for heating, but you lose a lot of energy for cooling. And if you look what's happening worldwide, there's this major and alarming and almost scary trend of higher prices for food and energy, and this is killing especially the poor and the middle class.
And on that note, let's talk about the looming diesel shortage here in the U.S. Willem, do you think a solution will be found? I mean, I had George Gammon on saying it's going to be a zombie apocalypse if we don't get one within the next 25 days, which he thinks is highly unlikely. But does the U.S. always find a solution? And I think bigger than that, the question is, how do we even get ourselves into this situation?
Well, we all know there's a serious recession coming, also in the US. And as 50% of fossil fuels, the demand might come down. So I don't think we'll end up into a Mad Max situation because of a shortage of diesel. But I always like to point out that you have all these problems coming now. These shortages in commodities, many physical markets getting stressed. I'm a fund manager of a resource fund specialized in the metal space, and we see shortages appearing everywhere. We see it in copper, where the premiums are going up rapidly. We see it in the silver market. So many markets are on the point of breaking.
On that point, just your tweet caught my attention. Shortages in physical copper markets Codelco, world's biggest copper miner, has proposed a premium of $140 a ton for 2023. That would be an over 33% increase.
I was surprised by this myself, because you always look at the future markets and the spot markets, and then you see a copper price is quite low. But what do we learn? Codelco is the largest copper producer worldwide. It's a state company, Chile. And they aren't selling their copper for the spot price. They aren't selling their copper for the future price. They have premiums up to 30 to 80% for the different countries. So the copper price we all see on CNBC, forget about that. That's not the price physical copper is being sold for. We see the same in the silver situation, where prices are being held down and managed or even manipulated by selling all these paper contracts, all these future of speculators pretending they can deliver the copper. But this is also a market which will break down somewhere in the not too distant future.
Willem, I believe we got in all our talking points. All that news.
I think most of it. Yeah,
I think so most of happening. It. Phew.
One point we didn't discuss is that the dollar seems to be topping out. We've seen this huge run for the dollar.
Yes.
Yeah, we've seen this huge run for the dollar. And if you look at the graph now, it seems to be topping out. And that was also the reason why gold and silver went up quite a bit in the last week. And I think gold and silver, the precious metals, really turned the corner here. And what's very interesting is silver is leading over gold. Silver bottomed out earlier than gold. It has a steeper uptrend. And I think that's a very strong situation. And we've seen a breakout to the upside from the downtrend since February, March this year. But we still have to clear the downtrend, which started in the summer of 2020. And that will be a large struggle for the precious metals. But what we see in the market is there's a lot of interest from retail investors to hedge themselves on the inflation problem. And I think there's a strong move away from the paper assets to the hard assets. And we've seen very strong inflows actually since the COVID crisis, but also this year, although returns are down this year.
So are you, I know you're the founder of the Commodity Discovery Fund, but interest in the miners, are you seeing an uptick? This market has obviously been destroyed here, but has it also turned the corner, the miners?
Look at the producers, gold producers, Newmont and Barrick. Yeah. They seem to have bottomed out. If you look at the yield, the dividend yield is 4 or 5%. So how low can you go? And if you look at these markets from a technical perspective, from an Elliott wave perspective, I think we've seen the end of the correction, phase 2, and we're witnessing the birth and the start of wave 3, which is the most powerful move upwards. And if you ask for a target, then if you look at the GDX, which is the ETF for the gold miners, junior gold miners, you could easily have a rally in the next 12 months of 50 to 70%, because the technical situation is very strong now.
Willem, it's always a fascinating conversation with you. Any morals of the story here?
Well, the last last point on this new gold rally. Gold has been in an uptrend in all currencies except the US dollar, and now we see the start of a new uptrend even in US dollars, and that's very powerful.
Story we will be watching for sure. Willem, always love having you on. Thank you. We'll see you soon.
Thank you.
And thank you all for watching. We'll have much more for you, so be sure to stay tuned to the Daniela Cambone Show. And don't forget to sign up, danielacambone.com. That's it for me. Thanks for watching.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.